Welcome to Penny Flow, where we talk about money, wealth, investing, and management. And in today's video we will be talking about how to build your credit score. Please make sure you stay tuned to the end of this video. Your ability to borrow money or get things such as credit cards, also known as a credit rating, would be influenced by building a good credit score. You can check your score for free, and if it isn't perfect, you can change it. What is a credit score? Your credit score is derived, also known as your credit history, from your credit reports. Your credit score can vary between lenders or between different products, often from the same lender. This depends on the criteria used to evaluate you as a potential client. Ways for improving your credit score. Number 1. Check for fraudulent activity. Contact the credit reference department to get your file checked if anything on your credit report is incorrect or does not apply to you. For example, if you apply for credit on your behalf without your knowledge, it helps to know what could work in your favor or against you to boost your credit. That's where the credit history review comes in. Pull a copy of each of the 3 big national credit bureaus, Equifax, Experian, and TransUnion, from your credit report. You can check it on the official annualcreditreport.com website. You can do it for free once a year to see what's helping or potentially damaging your ranking. Then check each study. Number 2. Pay your bills on time. If all of your payments are due on the same day of the month, making it harder to pay them on time, you might be able to adjust the payment due dates with your creditors. Paying a telephone, landline, or internet contract on time is a great way to show lenders that you can handle your finances. Bear in mind, however, that the move can take a few billing cycles to go into effect, so keep paying as needed until the update has been verified. It is also vital to be upfront with creditors about your ability to pay. For example, federal student loans come with alternative payment options that can lower the amount that you owe every month. But if you're not able to ask your student loan servicer about your options, you might not know about them. If you're experiencing financial distress, credit card issuers might even be able to maintain your bill or interest rate for a period of time. If you're worried that you're going to miss a bill, contact your creditor to discuss what's possible before it happens. Number 3. Avoid new hard inquiries. Soft questions do not affect your credit. They happen when you review your own credit score or when your credit is checked by a lender or credit card issuer to pre-approve you for a product. If you are searching for a single car loan or mortgage and applying for several lenders in a short period of time, it is also possible that you will not have a significant impact on your ranking. This approach is differentiated from opening loads of credit cards at one time by scoring models, and usually would not penalize the score the same way. When a lender tests your credit to assess you for a financial product, a hard inquiry occurs. On your credit report, it will show and will impact your credit score. That's because, if you're trying to borrow money from several different sources, lenders will consider you a greater credit risk. Number 4. Pay down debt. If you need more time to get your balances down, a balance transfer credit card could be a better choice. A balance transfer card offers an interest-free period that allows you to pay off your balances without accruing too many changes over time if your credit score qualifies you for one. Hopefully, by the end of each month, you can pay off your credit card bill in full. But if you can't, make a decision to pause using your cards to pay off credit card debt, and you're currently holding a balance. Second, you will want to spend extra money on the highest interest card, known as the form of debt avalanche, which saves most interest money. Or using the debt snowball strategy, you may pay off small balances, which might inspire you further. Number 5. Keep your credit use low. How much of the total credit cap you use is the credit usage. For instance, If you have a £2,000 credit limit and you have used £1,000 of it, your credit usage is 50%, so you use half of your credit limit. Typically, lenders will be viewed favorably for using less of your available credit, which will raise your credit score. Try to keep the credit use at 25% or below if possible. Number 6. Don't close paid-off accounts. Closing unused credit card accounts decrease the credit available to you, and can reduce your credit score. Holding them open and unused shows you can wisely handle credit, and think twice before closing older credit card accounts, because your score is boosted by long credit history. Tips for increasing your credit score. Number 1. Check your credit report annually or before any major application. Your Equifax, Experian, and TransUnion credit reference reports contain tremendous quantities of data about you. Errors occur and can destroy applications, so it is necessary to review them frequently and to go through line by line to check that nothing is incorrect. If possible, check the report at all three agencies, or at least the largest two, Experian and Equifax, as different lenders use different agencies and do not presume that the details would be the same for each one. Number 2. Paying insurance monthly affects your credit score. A hard quest will be undertaken if you plan to pay for insurance in monthly installments. This will affect your credit score. If you can, it's still worth paying upfront. Some insurance companies charge APRs of up to 40% if you pay annually. However, many people still fear that their credit score will also be impacted by using comparison sites. Comparison sites share a range of insurers with your details. They look at your credit report to verify who you are, give you quotes, and see if you can make monthly payments. Number 3. Reduce your debts with savings. Part of the details lenders has access to is the amount of unpaid debt you have. If you have too much debt, so your file gets damaged, would you want to lend to someone who already had a lot of debts to cover elsewhere? So avoiding this is a good approach. This is especially true if you apply for a mortgage. The less you borrow in proportion to the value of your home, the better deal you will get. Number 4. Cancel unused credit cards. It can be a problem to have access to so much available credit. Even though it is not used, it might be a smart idea to cancel most of them if you have a number of unused credit cards and plenty of available credit. This decreases your available credit, which can improve your score. However, long-standing accounts with strong credit records can be a benefit to your credit score. Just to complicate things, so they are always better kept open. As to whether you can shut down your old cards, there is no definite answer, for all lenders are different. But look for a happy medium to hit. If you have lots and lots of unused credit, shut down some cards, but do not shut all of them. Number 5. Stability counts. Use consistent details between applications. Homeowners tend to be more readily accepted for credit rather than tenants and those who are working rather than self-employed. Some lenders may factor in having a fixed land line rather than a mobile number on application forms, but it is doubtful that it will affect your score. So if you don't already have one, don't pay to have one installed. It also helps to have the same boss, bank, and address for a while. Keep the same personal information between applications. When you fill in applications, it's important to be consistent, even over long periods. Try to use the same one on any form if you have a variety of work titles or phone numbers. If you use different ones, fraud scoring could flag you up. Number 6. Payday loans can kill mortgage applications. However, if you want a mortgage, you'll need a much better credit score by definition than an abysmal one. And you need to stop payday loans like the plague. See the Payday Loans Guide, not only because they're hideously costly, but because certain mortgage underwriters, those that determine whether you're going to get a mortgage, have explicitly said they simply condemn anybody who has a payday loan, as it's an indication of poor money management. Certain payday lenders disingenuously say that taking them out and repaying them on time will improve the credit score as it stars. For those with abysmal credit records, this is valid to a very small degree, but the proper use of a credit reconstruction card is typically much more reliable and much cheaper. Number 7. Use a credit card to build a history and restore past issues. Based on your past experience, credit scoring is all about trying to predict your future behavior. Many with a bad background do poorly, as well as those with no credit history, as it is difficult to predict. You need to create a good recent history to demonstrate that with the credit, you will be accountable and use it well. Number 8. Don't spend your applications too often. It adds a footprint to your file for a year any time you apply for a credit product, be it a credit card, contract, cell phone, car insurance paid monthly, or more. Too many, particularly in a short period of time, can cause refusals or desperate for credit. Therefore, don't do them frivolously. Spread out applications. In fact, it's almost worth thinking of applications as spending, so if you fancy a cashback credit card and have no other credit, you need to apply for your application in the next 6 months or so. But if you're just about to apply for a mortgage, wait until after that's over. What steps have you taken to increase your credit score in the past? Please share your experience in the comment.